What's going on, everybody? Michael Silva here. So the S&P 500 just had a very rare occurrence that we're going to be discussing on today's Stock Market Brief show, talking about the next move in these markets and why it's so important. If you're new here, well, welcome to the show. This is where we navigate the financial markets through the lens of technical and intramarket analysis. If you haven't been here before, make sure to hit that thumbs up. It's greatly appreciated. That's how you sponsor this show. And subscribe to the channel if you haven't done so already. Let's go ahead and get into today's episode. All right, people, welcome back to the show. So we got a lot to discuss, obviously, on today's episode. We're going to be going over some expected moves, some gamma exposure levels. We're going to be talking about the gamma flip level and what that means for us traders. First, we're going to start off looking at potential catalysts. What can really get this market going as far as volatility? And when you look at this is the macro calendar. We don't actually have really any important macro data drops really coming out this week of high importance. However, it is flooded with Fed speech. You can just see here, Fed Barr, Jeffrey, Waller, that's all tomorrow, Williams, Logan, right? We got Fed Powell out again, Williams, Barr, Jefferson, Bostic, Barkin, Chair Powell, Logan, Bostic, again. So we have all kinds of Fed talking, which could potentially bring more volatility, obviously, to these markets, but no real big macro reports coming until next week, where we start getting CPI data. And if you look into the companies that are reporting earnings, nothing really too big reporting earnings as far as like looking into the equity names in the S&P 100. Next week, we got NVIDIA, I believe Home Depot as well. Going into tomorrow's open, we got Uber, Celsius, Datadog, we got DR Horton, a big builder there. And then we have something like Disney, that could be a big one to watch there too as well going into this week. How do we perform today? Well, the 11 sectors that make up the S&P 500, rather confused, right? We had tech up there, consumer staples was up there, so we had a risk on, we had a risk off, and we had a lot of in the red. And if you look across the board over here, what was taking place? Well, basically the big index products, they're relatively flat. Small caps, though, is giving us a little signs here. What's going on? Maybe it's just breathing a little bit after its recent bump up, down 1% on the day. And if you can really see that here on the heat map, looking at the S&P 500, what held the market together today was the big market cap names: NVIDIA, Microsoft, Apple, Google, Amazon, right? Everything else there's a lot of red across the board. So that really did help out the market just end the day slightly up. Now, last week, we had a very rare occurrence. That week was a gigantic week, passing right through this area of resistance that I was watching overall. Now, how rare of occurrence is this to take place? Well, I pulled up a rate of change, a weekly rate of change, dating back 10 years and even 20 plus years, or almost 20 years. I'll show you momentarily. You can see over here, boom, this was up almost 6%. Now this, you can just look back. How many times have we come up here before? Well, over here, right? So 1, 2, 3, 8 times. I've already counted 8 times that we've touched this within the last 10 years. So 8 weeks within the last 10 years have we had a week this big. And something that they all have in common that I wanted to really call out here is when you typically have these clusters of bigger weeks up, and even days, you can see there's typically large down weeks surrounding those type of moves, okay? So this typically means, it's really bear market behavior when you start to see large clusters of large up weeks and large down weeks to follow. That doesn't mean the market's going to completely drop, but we'll get into key levels here momentarily. I just wanted to call out just how rare this actually is to take place, because a lot of people really talk with a lot of confidence that they know what's going to be happening next. And that's just not the case, right? We're seeing something that's very rare that occurs, and to say that you know what's going to happen next is very, obviously not a smart thing to be doing, especially in this market, to be getting overconfident. Now, if I date back to 2007, you can see the same thing here, right? So you had the pandemic. This was the 8 times that it happened over here. And then prior to this, it was all the way back here in 2011. And then we had also some times in 2008. And you can see it's also what? You have down weeks that are right next to big up weeks. You have up weeks that are right next to big down weeks. The same situation. So when the reason why I'm pointing this out is because when we have these large moves to the downside, they're typically followed by large up moves and large down moves. It happens to be just a lot more volatility in the overall market. And you can see as it stands right now, where are we at for the week? Well, we're relatively flat. So it's a start of digestion. Now, what's even crazier to me is when you look at the monthly time frame for the SPX, we're just actually having an inside trading month so far. Okay, so yes, we've started the month very strong, basically right off the open, right out of the gate, boom, we've went straight up. And what does that put us as far as in comparison for the prior month? it puts us basically flat, right? We had 3 months down, and we're seeing a little bit of a reflexive bounce here. And in a very short period of time, basically 3-4 trading days, where are we? Well, we're already reaching the monthly expected move. All right. So last week, the options market priced in roughly a plus or minus $94 or $96 move. We doubled that. So the options market's been getting it very wrong. So it's going to be important to watch to see here if they get it wrong from the monthly perspective. It's okay to get outside of it a little bit, but sometimes what we've been seeing is price comes back in. Very similarly, last month we tagged the lower expected move and we bounced right from that area. Now, well, we're at the upper expected move for the month, and we have a lot of time left. But it's not just the SPX. The Qs are sitting there right now too as well. Also an inside trading month, and we haven't digested the current rally that we're seeing. Now, this bounce came. We saw the option. We saw the ability for this market to bounce for multiple reasons, right? So a couple were these bullish percent charts, how we had bullish divergences that were forming. We talked about it, right? The NYA, the NASDAQ composite, right? We talked about the technology sector, bullish divergence right there. We talked about multiple different aspects, even the summation index, the 90-McClellan oscillator, various different signal charts and indicators. One that I didn't mention that I'll post at my Discord all the time. If you don't know about my Discord group, it's pinned in the comment below. I'll show you one of the things that I offer, and I'll give you an updated chart of what it kind of looks like now. But this was basically, over here was the zones for October 26th going into October 27th. And you can see there's a lot of green on the screen. If you don't know what this is, that's fine. I'll explain it here momentarily. Well, now what you're seeing right now after the bounce is we see a lot of red. You see the SPX up here where we said the downside was getting pretty limited at 7% potential to the downside of this indicator. And now where the upside is, right, it's getting red, upside is only 0.88. So it could very well be a time to digest and breathe. And if I show you what this looks like on a chart, well, it gets very green towards the bottoms. And when we get these large moves to the upside, it gets red. And you can see this throughout history play. I've shown this multiple times on this show that typically when we start lighting up full red, that's not the time to go long. You want to pause, let the market digest its move, and see what takes place. This is not something you want to chase. You want to see it consolidate. Like today was a digestion day, right? We just had an inside trading day. So we'll see and talk about some key levels for a potential break further to the upside. But before we do, I want to show you the daily zone list. Now, if you don't know what these zones are, this is an indicator built by Joe Catanzara. They're, think of them as advanced Bollinger Bands, but I like to extract the data from a bulk view, and it allows me to really see the market from this fractal perspective of what's going down to the lower end, what's bringing it to the high end, and where there could be potential opportunities. And it lets me know, hey, if it's up at the high end of the range, that's not really where I want to go long. It could be potentially where you want to short, if you short the market. If you don't, that's, completely fine there too as well. It's a very different it's very difficult to be, or it's very different to be a long-only investor and then also a long and short investor. So if we take a look at these zones, these are all the products that I track, that I share on the Discord group. And if we go into, I'll go into kind of the S&P 100 and what I see currently right now. But as I'm looking at the SPX, you can see it's north of the higher end of the band. And basically what this tells me, this is the mid band, the high, the low. When it turns red like this, it's within the top 20% of that band, okay? And when it gets dark red, it's within the top 10%. Now, as the S&P 500 goes up to the top end, it's typically normal to see the VIX come down towards the low end, and you can see this is turning green, so it's within the top lower 20% of its band. 10-year yield right now, it's a little bit, it's below the midpoint, but we came off just a little bit from the lower band as we've seen that big drop. And I'll show you the chart momentarily. The dollar, also an important asset to watch as the dollar is nearing its lower band. This has a negative correlation that we've been tracking with the S&P 500. So this is coming to the lower, this is coming to the higher. What's high yield telling us? Well, this is also coming to the higher. If I scroll down, anything that stands out, what I'll notice here is you got some ETF SPY, Q, IWM, came off a little bit today, DIA, XLY, so one of the big sectors, XLB, XLK, so tech, right? That's getting dark red, which tells me what, right? Well, we talked about the heat map today, how everything was kind of lighting up into the green there. Well, now we're kind of getting to the higher end of this specific band. So it may need very well to breathe here in the near future. And I guarantee you NVIDIA earnings are going to matter to this market. Real estate, right? Towards the upper end, industrials, financials, Consumer staples also up there, even utilities up there too as well. So we had a overall pretty large, broad rally as of recent, but what we haven't seen is a digestion, right? There's semiconductors towards the top end. You have retail, you have regional banks, then you have TSM, which is just an individual equity, right? That's just a big market cap name there. Important. KK, SQQQs obviously to the bottom. Now, if I scroll down to individual names like the S&P 100, where am I seeing the big market cap names? Well, Apple towards the higher end. You have Microsoft towards the higher end. Look at NVIDIA. It's way north up there. So is this the place where I'd be like, yeah, let's go long right now? No, I'd want to see the market digest. First, I'd look at this and I'd say, I'll pull up the chart. When I look at the chart, what's it doing? Well, right now it's kind of going like this, right? So I'd want it to see it digest. See, expansion leads to contraction, and then you can play from that area. So this right here would tell me not the time to just kind of go full bore, okay? Or if you were long towards the bottom end, and then you could take profits towards the top, right? It's multiple strategies that you can use for this, obviously. If I keep scrolling down, anything that stands out to me, Home Depot's coming into earnings, right? Next week, that's towards the higher end. Oracle's up towards the higher end. Keep going. Bank of America. So financials had a really good week last week. Right? We saw a nice big rally from some of these semiconductors. That's towards the higher end. Nike coming towards the higher end. Qualcomm towards the higher end. These are all names from the S&P 100. Starbucks did report earnings, right? So we'll see how this contracts and how it holds those earnings, but that's towards the higher end right there too as well. BKNG, and then we kind of just go down the list. It started with highest market cap. I even have global ETFs on there, and as the dollar took a drop, right? So the dollar takes a drop. What's happening to a lot of global ETFs? Well, you can see they're nearing the higher ends of their bands. Here's EEM, emerging markets, right? EWH, INDA, EIS, so forth, EWM, all towards those higher end. I even track various commodities. Commodities are kind of a mixed bag here. DBA towards the higher end. Wood, so lumber, right? Towards the higher end there. Soybeans, cane towards the higher end. What else do we got? Currencies. So look at how the dollar drops. Look at some of the currencies that are doing well towards the higher end. Boom, boom, boom. Okay. So these, if you believe that the dollar is overall, bullish, this could very well bounce from the lower end, bringing some of these currencies down. Fixed income, different fixed income products that I track on there. I'm not going to go too much into that. And then I track some volatility products. So skew north of the higher end of the band, right? So that's a little bit interesting to me. And then volatility, you have gold volatility towards the lower, oil volatility is towards the lower end, VIX futures volatility, VIX, right? VIX 3-month, VIX 9-day, VVIX, VXN. And then I have some Chinese equities there too as well that I track. So what is it that I'm noticing overall within all of this stuff? Things are a little bit overextended. They need a digest, and there's a lot of different products, including the mega cap names such as Apple, Microsoft, NVIDIA, with NVIDIA reporting earnings. It's a time to pause, and that's where we really got to get into some important levels, okay? So if I take a look at the dollar, the dollar dropped off. This really did help propel the S&P 500 up. You can see a big gap down, follow through, and now we had a pretty decent sized day in the dollar today. And what did that lead to? Just a digestion day overall there. But then also to take note is we had 3 days of the 10-year yield coming where to the lower end of its bullish channel. And that's what we talked about up here. We talked about that bearish divergence taking place, right? And we said, hey, don't be surprised if it comes down, but it's going to be what? Just a series of higher lows as it stands. Could still potentially break from here, but as you can notice, we gapped up. We were up 2.28% on the day. And if this continues to rise up, well, we've seen already multiple times how that affects various different equities from an absolute and relative performance. While this is taking place, the TLT saw a nice bounce up to that 50-day, started reverse a little bit more today. We'll continue to track that, see how it works. There's a tight correlation between the 10-year yield, right? Yields and oil has been coming down just like the 10-year yield. I've been looking at that 200-day to potentially connect to. We'll see if it makes it down there, but overall, we broke down from this bear flag and it's kind of just consolidating sideways as it stands. So when we take a look at, the next move and why it's so important, it's because we haven't even had a digestion, right? So you can see we've had multiple rallies. Boom, boom, boom. Right? We had a low, we had a high, a lower high, a lower high, a lower high, and currently a lower high as it stands. But this move has been kind of straight up. So what we need to see is how the market's going to digest this move. Is it going to just pull back and then we're going to continue its uptrend, are people going to start saying, see, now it's a inverse head and shoulders. That was a head and shoulders, right? Now it's an inverse, and then we go back up to try to scream. That's a possibility, but I will not, encourage or say to chase this exact move without seeing digestion, which we currently saw one day of digestion today. If I take an anchored VWAP and I measure it from the 2023 high where we had that bearish engulfing candle, take a look as price got above it a few times, but now look at where price is digesting right below it. So perhaps if we do get a hit from here, it can go push up a little bit higher, fill this gap, which it didn't do yet, and potentially try to take out this current, this kind of prior area of supply right here where we saw a big drop off, which kind of matched in with this level of support, right? So we saw a big move from here, back test, boom, when we broke through, which could take us roughly to around 443, 442, right around that area. Now, if I look at SPX and we pull up some very key levels, this is utilizing gamma exposure levels, and I'll show you where the gamma flip level is. That's 43.30. This right here, when we're above this gamma flip level and why it's so important, okay? And I'll show you what the gray shaded boxes are here momentarily and everything. But the big level here, 43.30. The 43.30 as it stands tells us as price is above it, we're in positive gamma territory. When we're in positive gamma territory, that means sellers typically sell the rips and then they buy the dips. So volatility typically is lower in this environment. However, when we click below these levels, so when we're below in negative gamma territory, buyers buy the rips and then they sell the dips. So basically, in short, what that creates, it creates a much more volatile trading environment. You'll see larger swings back and forth. And that typically is good for traders, but you also got to realize you can take on smaller positions in that type of environment because your swings are typically a lot larger. And we've been in a negative gamma territory for quite some time. It wasn't up until recently where we popped into positive gamma territory, where now the gamma flip line is at 43.30. Now these gray zones, these are what TradeEtix calls ghost zones. And this is just telling us that price, when it's around these levels, can move quickly quickly through these levels. So if we get above this 4,400 gamma exposure level, which is a large gamma level, we can see a quick move up to 4,450. Okay, that's as current gamma levels are currently standing. Now, where we are right now in this digestion, we're kind of right in this ghost zone. We have a daily expected move tomorrow for the SPX at 43.43. However, if we start pulling down, we can see a quick hit down to this lower gamma exposure level of 43.30, and that's also in line with the gamma flip level. So if you're a bull, you really do want to hold the gamma flip level. So if price pulls back into this area, that'd be okay. If we start breaking down to the lower weekly expected move, that's what these orange lines are, you really want the lower weekly to hold up. And this would be a good opportunity. If price can come down here, we'll see how price works. But even on a move like this, and then just a consolidation down here might freak out some people. But knowing that this is the lower weekly expected move, and we'd be going back into negative gamma territory, but we'll see how kind of it opens up. That's just a small pullback in an overall strong move. And you got to really just look at this from a larger picture here. This is the low, and as it stands right now, on any pullback, no matter even if it's down to 4,200, right? 4,200 right here. If we bounce from this level, that would be a higher low, which would be a positive thing. Then we'd have to take out this high or this high to have our first higher high. And that right there changes the trend to having a series of lower highs, right? Lower highs, lower lows. Well, that would change the trend to have a series of our first higher low and a higher high. Now, I also anchored a VWAP down to this low right over here, and you can see if we pull back on the SPY, that can be to this day right over here, which is due about 423 right into that area. So as it stands, if we were to consolidate and kind of, move into this area and price gets pinned, well, it can pinch between these two anchored VWAPs, and that could be our consolidation, and we look for either a breakdown of it or break up. Okay, so that is one potential scenario from the daily time frame. So if you want this chart deck, you can actually, on the pinned comments, I have the entire sorry, I don't know, I was all pushed to the side. If you want this chart deck and all these levels, you can just download the chart deck, which I have down there in the pinned comment or the description as it stands, just so you can have these levels on your screen. Now, going into tomorrow, we do have a negative DEX, so the daily sum of deltas across the entire market is negative. So then tomorrow, it's basically saying, it could very well be a down day. We'll see if that's the case. It's not like a crazy reading. If I look at the flow map of what was taking as far as positioning goes for the 1110, there was a lot more puts. So this, kind of interesting how it kind of lines up. So we'll see here if this basically just tells us in short that we could just be, in for a little bit of a down day, or if we're going to just clutter through this ghost zone and hit the lower daily expected move tomorrow. It's all about these specific key levels, breaking above this anchored VWAP over here to come up to the upper daily expected move, or breaking down from the low coming to the daily expected move right there. But as it stands, just a subtle period of digestion after a very large run up. Got to be very cautious. We can get a little bit more tactical looking at the 15-minute time frames. First, the October high is in line with the upper daily expected move. So say if we get a move up higher, people are like, yeah, let's go, right? This is our consolidation, then we're going to start pushing higher. Well, up here was a previous area of supply. That's also in line with our daily expected move, so that can act as a potential area of resistance. If you're looking to short this move because it hasn't digested, up here could be a very potential good area to build a position up north of the weekly and the daily. Remember, the SPX on the monthly time frame, it's already at its monthly expected move. So getting outside of that, understanding that the probability is 68% of the time we close within it, would have a higher probability that we come back in within this month. Okay, now if I zoom in a little bit more, you can see here we have the week to day anchored VWAP. You can see we kind of bumped up and through it today to the close. So if we gap down, and we start the day down, look for a tag of the lower daily expected move, and then pay attention to the month to date anchored VWAP too as well. You can see we kind of started up and we kind of just chopped sideways to below it, but when we finally broke above it, boom, that's when things really started kind of ripping there, and we haven't actually touched it as it stands, and we're above an inclining 5-day moving average. So yes, the move, in short, it's bullish context, bullish price action, so it is bullish. However, you got to consider, okay, where did price come from? Well, it's already had a strong move, so look for the digestion point. As long as this is inclining, you look for pullbacks to it to put in a series on the shorter time frame of higher lows and obviously higher highs. So hope this little show helped out and you got some key levels. If you want to download the chart deck, please do so in the pinned comment below. That's all I got for you on today's episode, everybody. Have a wonderful night.